Welcome again to a lesson. In this lesson, I told you that we will look at breakout strategy. And before we continue, ensure that you subscribe and also click that button. Support other traders. Share this video with them. People who are struggling to place their trades. Share it with them. It can be a game changer. It can change life. We never know. So I go directly to the breakout strategy. This is Euro USD. I said that breakout strategy I'll use the pound. So this is pound. So I will set this chart to look a little bit quite appealing. This is bull. We put them all green. Bear means going down. No, this is not what I wanted. We can change. We go to properties. Bear line graph bar down. We are putting red on all bars that are going down. Let me put red. That is not red. Then we go to common. I don't like grid, so I'll show grid. I'll remove show grid. Okay. Yep. Then I will delete this indicator list, this moving average. I remove the moving average. Now, as you can see, this chart, I remove that. So in this chart, we are looking at how we can trade breakout strategy. I'm not using any knowledge of support and resistance. I'm not using knowledge of supply and demand. I'm not using Elliott wave. I'm not using failure swing. What I am using is the breakout. How to check breakout and how to identify fake breakout. But again, I will also use the breakout strategy following the swing. That is the trade. So I must get the trade for me to check this. Let me use hourly chart on this. I'm trading using hourly chart, and so I will show you how to check breakout strategy in this case. So this one looks funny. Okay, it's okay. So here we had an up trade. Okay, when I talk about it, breakout strategy, before I continue to the charts, let me explain. Breakout strategy is a strategy that moves like this. The market consolidates, breaks up, market consolidates, breaks up, market consolidates, breakouts. Consolidation can be a little bit of correction, Then it starts going down, consolidates, breaks out. So what are we doing? We are trading these, You see? So when we talk about breakout, is breakout from this consolidation area, or this it's a little bit, sometimes it's correct, sometimes consolidates. So there is a lot of noise in these areas, and we are advised not to trade when the market is there. So yeah, so that is what I'm talking about. Okay. See, so that is how it is. So with that, this is what we are calling the consolidation. This is what we are calling the consolidation zone. So this is the con. So this is the consolidation zone. Then here is where the market breaks out. The market breaks out at that point. So now this is now the breakout. That is now the breakout. The market consolidates breakouts. The market consolidates breakout. So in our case, when you are trading, we are moving very fast. When we are trading, in our case, we place a buy position. Buy position there at the breakout. Change this to green. So our buy position is there at the breakout. Okay, so we do not trade it at the consolidation zone. We trade when the market breaks out. So avoid fake breakouts. Like for instance, here we had a level that was broken. I will show you how to do that. Let me come to the sell. The market consolidates, breaks out here. So we are not trading at this point. We are trading at the second point because we have seen that the market is going down because it has beaten the previous consolidation or the correction. This one I drew it as a slightly a correction now, just a correction. Okay, so this one, after this one, this is the consolidation zone. So this is again a consolidation. Let us not try. Let me place this. So this is another consolidation. I'll call it consolidation. Consolidation. Or the correction, but let us use consolidation because let us assume that it's an area like this one where market is not going anywhere. You see here, you see like this area where market is not going anywhere. So we say that it is a consolidation. Then when do we trade? We trade when the market breaks out of this line or out of that zone. We do not trade here because the market can break up and go up, and then our analysis is that since it has beaten this level, the previous level, that is this is the other consolidation, and moved it down, we are assuming the market will continue going down. So in this case, the market is consolidating, and we sell at this point. After the market breaks out here, this is when we place our sell. We place our sell. So we place our sell here. Sorry, I have to edit the properties and put Sell, let me put it as a red. Okay, visualization is now parameters. Okay, come on. Okay, anyway, that's okay. So our sell position is at this point. This is where our sell is. That is where our sell is. So it is as simple as that. The theory behind the breakout strategy is that the market consolidates, then breaks out, consolidates, breaks out, corrects, breakout, corrects, breaks out, consolidates, breaks out. Okay. So there is a lot of noise in consolidation areas, so do not take consolidations as a support and the resistance and you start trading somewhere like here. Start placing your trades somewhere like here in the market. You do not have to place trade. So as simple as that, you can see that but the market moves like that, breaks out, consolidates, breaks out, consolidates, breaks out, and during the breakout, once the market leaves the consolidation area, that is when we place our trades. So even in this case, when the market leaves this area, that is when we place our sell position. The same case applies to this area. Once the market leaves this zone, that is when we place our buy position. When leaves this area, please you can also indicate when this is another area that we can look at. This one, then we have this one. Okay, but at least once you place this trade and then you put your stop loss at a point like here, don't be in a hurry to close this trade when you see the market consolidating. Wait for it to break out. You know, don't be in a pressure of placing a new trade. So that one will not help you. So I think you understand that. Now I will show you how to do this in the market. Now in the real candlesticks, how to identify these zones and how to trade them. Okay, let me delete this. I hope that you got all these. This is just a theoretical explanation of what we are doing in the market. Now we can go directly to the market and you see what we are having here. I'm checking something. Sorry. I had even forgotten that we are. Okay. Now I can delete this. We go directly to the movement of the market. We could go directly to market analysis. I think this one will be very helpful to you, and you will get something out of it. Very, very, very important information I'm sharing here. So I have removed all those stuff, and again I delete this work. So We are moving directly to the market. I show you where the consolidation areas are and how you identify this. So we are using the current market. Here the market was up, then you see, let me start drawing. We are starting as breaks out, corrects, breaks out, corrects. No, I've drawn these wrongly. Breaks out, then comes to here. One this breakout, this correction is the market returns to this point. You can see that it is let me draw these using another expertise. I draw this one using another. It's okay, it's enough. So it breaks up. The other level was here, so this level is above this level, so we are expecting an upward trend. We are expecting now it consolidates. It has broken up here, so here the market is still making some noise. Okay, so we are expecting this market to break out and continue going up. I might check after some time that this has happened. However, you can see if we check support and the resistance, check that the market is already dancing on some support zone. No, resistance zone, sorry, the resistance zone. So yeah, so that is how we trade the breakout strategy. So now here we can have this as a breakout. Let me draw another line. That is very accurate. This one is not accurate. This is the accurate line. So we can place our buy position, our buy position there. So here we buy. Use our green for buy, the line. So we buy there, then we place our stop loss here. So our stop loss, place our stop loss here. Ensure that you always place your stop loss. Okay. I hope you are getting it. To explain this, we are having this. See these areas, let me mark them. See, you see, now we are having the current one, so we are expecting this market to then go up. Are you getting? So there is this area, you see, this area as well. So as simple as that. Now I want us to check a buy position, how we could have gotten the buy position. We have said now this market, based on our analysis, it's going up. Okay, and again it is obeying another law here of the trader. So we are going up. As simple as that. Here is where we could have done a buy, a sell. Good. The market was going up. The market was going up. Market was going up. So we have this one and this one. We have this one went up, corrected, did not come up to here, so it broke again, went up, corrected, went up, did not come to here, went up, corrected, but this correction came, reached that point. So this was an alarm. So it went up again. This one did not reach this point. So this was an alarm. So we could have captured this breakout. But what we could have done is wait for this consolidation, wait for this one to break down here. It did not break down here, so it broke up. So we check on this. Did it break down? This one did not beat this one, so this one is very okay, but this one came to this, then it consolidated, and as you can see, it broke. So our sell position would be here. You see, it took long to place our accurate sell. Okay, so here is where we will have our sell position there. So we will have our sell there. We'll have our sell. Our sell position there. I put it in red. Our sell position will be there. Then our stop loss, we place our stop loss here. So this one will be our stop loss. So our stop loss there. Then we milk. Let us see whether we milk the market. See? So it's as simple as this. So this one will be our sell position, and we expect market to go down. So this is our stop loss. If you check very well, it will never be reached. So our stop loss, it's at this point. This is our stop loss. Sorry for the nini. Our stop loss is here. So we could have gotten how many pips? Let me delete these. So we could have gotten around from here to here, from our sell up to here. Let's say that we took our profit at this level. At this level, you can milk till you hit your target. So we use the crossbar. How many pips? 449. We ignore the last digit. We are measuring the second. The second is now the pips. Okay, it's around 430. Here is 455 pips. Yeah, so that is good amount. Even if it's 100 plus pips, that is okay. You can do with that. So that is the breakout strategy, and thank you for this. I think you have gotten something from it. A very, very important strategy that you should check, especially when you are trading. Yeah, that is the volatile, the currencies that are highly volatile, and the strong currency, we call them the dragons in the market. That is the gold and GBP and some other very volatile strategy. I think I should produce something to do with the exotics. Why you should not trade the exotics? Why you should trade the exotics? What are exotics? Okay, so why you should trade exotics? So I will also look at that, and again I will also produce the videos that are whereby I will be combining all these strategies, or the lessons that I show you how I combine these strategies, because I do not use one strategy to be I don't stick to one strategy. I'm dying. I can't die with the breakout, the Elliott wave, the demand and supply, the support and the resistance. So what I do is that I combine this strategy to make a system. That is my trading system. When I look at the market, I'll see demand and supply, I'll see support and resistance, I will see the Elliott waves, I will see also the breakout. So I will show you how I combine and relate all this strategy. I will also see the swing, that is the use of trade line, the failed swing, and whatsoever, everything. I will see all this in when I am trading. So thank you for this video. Thank you watching till the end. It's good. I know that you have gotten something very important. Share this video. If you have not subscribed, subscribe, and we continue with this game. It's a very nice profession. Okay, see you.